Welcome back to the Bitcoin Layer. I'm Nick Batia. Today, we welcome Matthew Sigel. He is the head of digital assets research at VanEck. Matthew, great to have you on the program.
Good to be with you.
Now, let's discuss Bitcoin first. I want to ask you why you have recovering CFA in your name on social media. I'm also CFA charter holder. What does that have to do with Bitcoin?
Bitcoin is often the disillusionment asset, although I think maybe that's changing with a whiff of mass adoption here by sovereigns and corporates. But I started my career as a journalist covering finance at Bloomberg and CNBC and kind of got conviction in this phenomenon of fake news pretty early and was envious of interviewing folks with more zeros next to their personal balance sheets. So got my CFA and was on the buy side covering tech for an equity portfolio for a number of years. And through that process, I got conviction that Bitcoin was going to disrupt many centralized institutions due to kind of a trust deficit in the world. And I noticed that the CFA curriculum was not keeping pace with my conviction and seemed to be focusing on things like ESG that didn't matter to security selection from my perspective. And I thought that the curriculum has kind of lost its way a little bit. So kind of a joke and a nod to my lack of alcohol for many years here as well. But I think the CFA program has adjusted, actually. It's like when a stock goes down too much, the management often pivots. Same thing when a token goes down too much. And I think maybe some of the credibility of CFA, they realized it was disappearing and have bolstered up the digital assets part of the curriculum, removed some of the ESG. So things are turning around. I actually just paid my dues again for the first time in several years. So back in the fold.
Excellent to hear. Yes, I've been renewing throughout, and I did see them start to make somewhat of a pivot a few years ago. So encouraging stuff, and like you said, the price is truth, and you do have to respond to the market. Is Bitcoin's next parabolic move starting already? I want you guys to go check out this report at unchained.com/TBL about liquidity. Now, it uses a slightly different methodology than we do at TBL, but I really think that you guys would benefit from checking out this report and understanding Bitcoin's relationship with liquidity. Unchained and TechDev break it down in a new report. Visit unchained.com/TBL to get that report right now. Blockstream Jade Plus is the easiest, most secure way to protect your Bitcoin. Perfect for beginners and pros alike. With a sleek design, simple setup, step-by-step instructions, you'll be securing your Bitcoin in just minutes. Seamlessly pair with the Blockstream Green app on mobile or desktop for smooth onboarding. And if you want more security, Jade Plus supports multi-sig wallets with apps like Blockstream Green, Electrum, Sparrow, and Spectre. Protect your Bitcoin, sleep better, and stack harder. Use code TBL for 10% off. Go to store.blockstream.com. Use code TBL for 10% off. Matthew, I want to ask you today about BitBonds a little bit. I want to ask you as well about the erosion of shareholder value potential with some of these new corporate strategies. But before we get into that, talk to me about the relationship between VanEck and University of Southern California, where I'm an adjunct professor. I just want to get a little bit of background for the viewers so that they can understand how these two institutions are connected.
Yeah, great idea. VanEck's a private company. It's owned by the VanEck family, specifically Jan VanEck, who's been CEO for almost 20 years now. His dad started the firm. Jan is on the board of USC via some family connections, and he gave a donation in 2021 that catalyzed the creation of the VanEck Digital Assets Initiative, which is a curriculum across the business school and the engineering school, and includes funding for classes as well as an annual conference. So we're trying to seed the next generation of blockchain innovators on the West Coast. I think a lot of the kind of premier work so far has been done on the East Coast, and see an opportunity to make USC the left coast hub of digital assets innovation. So pleased to be in the fold here. Our interns from USC this year. Look forward to some closer collaboration.
It's phenomenal, and it is part of the reason that I've had the pleasure of teaching layered money and Bitcoin at USC over the last few years, and hopefully far into the future. So let's talk about BitBonds first. I haven't been covering it a ton on the channel because it is an idea in its infancy, and I like to look to the market for actual demand. So give us a sense of the idea, BitBonds, what you think of it, and how you think it might play out.
Sure. With the creation of the White House's strategic Bitcoin reserve, which right now consists of the coins which have already been seized from various kind of criminal investigations. There's a lot of effort on how to make that reserve sustainable, durable, and potentially include the accumulation of coins, either in the open market or through changes to the tax code or other incentives. So one idea to jumpstart U.S. government holdings of Bitcoin is to make them one of the elements of U.S. Treasury issuance. So right now, when the U.S. sells, $100 worth of bonds, they get the proceeds from the lenders or the bond buyers, and they use that money, that cash, to fund budgetary requirements, working capital for the government, and then they pay back some interest rate over the course of the Treasury. One idea is that the US government could conceivably buy Bitcoin with a portion of those debt sales, say 10%. So 90% of the proceeds would go towards funding the working capital of the government as usual. $10 worth or 10% would be held in reserve, used to buy Bitcoin, and then that Bitcoin would sit on the balance sheet of the government. And in 10 years from now, theoretically, it should be worth a lot more, and that could form some of the return of capital for the bond buyer. And because of Bitcoin's strong performance track record over the years, there's a feeling that bond buyers would feel pretty comfortable with that Bitcoin as collateral, and they might be willing to offer a lower interest rate for the 90% of the bond because of that security of the Bitcoin collateral. And then any upside after 10 years above a certain hurdle rate might be shared, say 50-50 between the government and the lender or the bond buyer. So on our math, this could be a pretty attractive proposition if Bitcoin is able to sustain like a mid-teens compound annual growth rate. And if investors were to reward that the government with a lower interest rate, there could be significant upside from both the government perspective and the taxpayer or lender perspective. And it might be a way to kind of get Bitcoin onto the US balance sheet via the Treasury. There's a lot in the executive order that detailed the strategic Bitcoin reserve. There was a criteria that any accumulation would need to be quote unquote revenue neutral. So there've been a lot of kind of creative ideas as to how to do that. My reading of it is just because something is revenue neutral doesn't mean it can be done without legislation. So to acquire Bitcoin, with any magnitude, over maybe 100 million or $1 billion worth, it probably requires legislation. But maybe that legislation could be targeted at the Treasury market and allow the Treasury to hold Bitcoin. That might be enough to get a creative idea like this off the ground.
Where do you think we are in the process of getting this idea off the ground?
That's a very good question. The administration has been pretty light on details so far as to how exactly they will make those acquisitions and if there will be any. Um, I think to do this with any size, it's going to require legislation, and I think we're a long ways from that. But if there was, say, a small pilot program, $10 million, $50 million, then I think that's doable. But is the juice worth the squeeze, right? Is it worth putting political capital on the line for something so small? I think these are the questions the administration's working out now.
And I would like to echo some of that. A lot of the viewers and readers have been asking me, do you think that the government is already buying Bitcoin in secret because of the executive orders that we've seen earlier this year? And I would argue no, because of some of the reasons that Matthew is outlining here. Now, what about, let's move on to the trend, the major trend in Bitcoin, which we had ETFs as the major trend of 2024, but it's clear that the major trend of 2025 is the adoption of Bitcoin on the Treasury balance sheets of these corporations, a massive wave of buying. It's bringing, of course, an additional component of demand to Bitcoin and supporting the price, but there are dangers to private industry getting involved in these strategies. You'll have winners and losers. That's been a theme of the Bitcoin layer. So give us your take on where we are in that trend and some of the warnings that you've been putting forth on the dangers here.
Yeah, sure. So in the last 12 months, corporates, so public and private corporations led by MicroStrategy, have now surpassed ETFs as the largest buyers of Bitcoin. These corporates have bought more than 350,000 Bitcoin over the last 12 months. More than 100,000 of that has been added just year to date. We count 21 new Bitcoin Treasury companies just launched in the last 30 days through June 11th. So the MicroStrategy's strategy has now been, I'd say, legitimized by a number of kind of cash-rich, slow growth corporates. That's for whom this type of strategy, I think, is most applicable. The benefits of this is that the equity capital markets are now wide open for anything crypto related. So after the election, a lot of investment banks started looking into underwriting these types of deals, and the kind of traditional Wall Street stock picker is now more open to these types of stocks. And you can see it in the performance of the Circle IPO, for example, which is up again sharply today. If we look at the past cycles for Bitcoin, they all tend to kind of, the end of the cycle is marked by a leverage driven kind of blowout of parabolic price performance. It's very dangerous when it's leverage driven, and nearly every lender in the last cycle went bankrupt, whether that's kind of centralized tech companies like BlockFi and Celsius that they got a bit over their skis in terms of their financial dealings, or whether it's Bitcoin miners who levered up last cycle and then couldn't pay their debts when Bitcoin price fell. This cycle, it's more of a dilution driven price action. And that is enabled by these wide open capital markets. I'm not so sure that the end result won't be the same, which is a fair bit of a hangover for equity investors who are piling into companies that are trading at very high multiples relative to the Bitcoin that they already hold. So I think that MicroStrategy and Saylor, and there's a few other names that have kind of differentiated alpha strategies or relationships in the space that may allow them to sustain this equity issuance-driven accumulation. But for many of the companies that don't really have differentiated access to, say, convertible bond buyers or a way to source Bitcoin at a discount. I'm worried about the next few months as some of these new shares become unlocked and can be sold by some of the early funders of these new Treasury strategies.
So can you get a little bit into that, the creativity required on the capital structure side, creativity, but also you have to be able to access those markets. So you have to be big enough to have the ability to issue those types of convertible bonds. So is it creativity plus size, or can you start there, and then I want to ask you a question about the dilution.
Yeah, sure. Saylor often talks about this, that the convertible bond, there's a pretty long-standing strategy on Wall Street that involves buying convertible debt and shorting the underlying stock. And the hedge funds that are active in this trade, they don't want to get involved in a new name if that name isn't going to have some duration to it, where the bonds will exist and there'll be new issues over the next quarters and years. And Saylor's done a very good job of engaging with that community and feeding them new convertible bond issuance and, of course, new stock for them to execute on that strategy. And the volatility of the underlying MSTR equity has remained quite high. And that's really what these strategies play off, is the volatility of the stock. And that's why one of the worst things for MicroStrategy is like a flat Bitcoin price, because the volatility falls and the value of these arbitrage strategies diminish in that environment. So there needs to be persistence to the duration, there needs to be continued new issuance, and there needs to be relationships, direct relationships between the issuer and the portfolio manager, where the PM can get confidence in that the strategy is going to remain consistent. So I think you're correct that for some of these smaller names that maybe don't have the investment banking relationships, or they're not liquid enough, it's going to be hard to engage that arbitrager community. And I think that's why MicroStrategy has been, the leader in this space and represents the bulk of the market cap. Then there's, of course, the risk that any number of these stocks can begin to trade at a discount to the value of their Bitcoin. There's one name which is already close to that level. And so once you're trading at a discount, it becomes very irresponsible to be issuing stock at the market in order to buy Bitcoin. You're diluting existing shareholders. And I think if and when we go through a bear market, the market's going to want to see clear communication from some of these companies that they would be willing to sell their Bitcoin and buy back stock in order to keep the stock trading at least on par with the Bitcoin that is held.
And that in theory puts a ceiling on price in that type of environment, where in a bear market, then you get the reinforced selling from that unwind, essentially. So can you talk about the dilution then for the smaller companies that aren't able to issue convertible bonds? Talk about the number of companies that are looking at that type of activity, and when they will issue at the money equity versus when they won't, and how you see that playing out.
Yeah, I mean, so up until now, no public Bitcoin treasury company has traded below its NAV, net asset value, for any sustained period. There's one that's now approaching parity, Semler, SMLR, and it'll be very interesting to see how they react to this. So, many of these companies are raising capital through pretty large at the market programs. ATM, it's when a company just issues equity at the current market price a little bit every day. And if the stock is trading at or below that NAV, then the continued equity issuance to buy Bitcoin dilutes rather than creates value. It becomes the opposite of capital formation. It becomes erosion. So my strong hope is that companies who are pursuing a Bitcoin Treasury strategy should adopt some safeguards now while the premiums still exist, and they should communicate those safeguards to the market. And I have a few ideas for them. One is that a company could announce that it will pause equity issuance if the stock trades below, say, 0.95 times net asset value for more than 5 or 10 trading days. The company could communicate that they will prioritize share buybacks in times when Bitcoin appreciates, but their underlying equity fails to reflect that appreciation. And they should also announce plans to initiate strategic reviews if the discount to NAV persists. And those strategic reviews might include mergers or spin-offs or sunsetting the Bitcoin strategy. It's almost akin to a type of living will that will give the equity buyer some confidence that they're not just going to get diluted to zero. Because there is temptation here, given executive compensation, if the incentives are not set properly for executives, that they could be rewarded on simply how much Bitcoin they own, rather than how much premium their stock trades to the value of the Bitcoin. And yeah, like nobody's going to want this dilution if it happens. So we're hoping for kind of clear communication and safeguards from management teams and boards, and hopefully shareholders can help to push that along.
Yeah, and thank you for explaining the risks and both sides of the equation here, because I think people easily see, wow, there's going to be a huge additional demand here as all these companies get involved, but the money has to come from somewhere, of course. And so we need to understand the mathematics of it, the other side, the risks and the downside there. So now take a step back for us and give us your sense of the overall Bitcoin market. You work at one of the largest ETF managers in the Bitcoin arena. So what is your sense of the market, combining the retail demand that was accessing the ETFs during 2024, the corporate strategies in 2025, and where we are geopolitically, perhaps?
Sure. Yeah, it's been our thesis for some time that the ownership of Bitcoin had been kind of overly concentrated in retail hands, and that if the asset was going to gain, mass adoption, then by definition there'd be more corporates and government stakeholders that begin to get involved. So as we spoke about, the corporate side has definitely materialized, and it's being felt in the price of Bitcoin from all these buyers, and then also in the equity markets where the price action is drawing in folks who are attracted to rising prices. So that part feels very positive and new. The government participation is less overt. It's more around mining operations. So we keep a tally of the number of countries that are mining Bitcoin using central government resources. So 5 years ago, there were 2 countries, Oman and El Salvador. Over the last 3 years, that type of government adoption on the mining side has accelerated. We now count 9 different countries that are mining Bitcoin with the support of the central government. The most recent to announce was Pakistan, which it's a perfect example of the type of country that has become more aggressive in mining Bitcoin. It's a country that has a loan from the IMF that needs to get rolled over. And when you can't pay back your IMF loan and you ask for relief, they usually say, yeah, we'll roll it over, but you have to do X, Y, and Z in return. And the X, Y, and Z usually involves raising taxes. And in the case of Pakistan, the IMF actually said to Pakistan, you need to collect taxes on crypto. And crypto is not even legal in Pakistan. So they were like, oh, well, we better, create a regulatory framework. They founded The finance minister started a crypto council. CZ joined the board, and then next thing you know, they announced that they're going to allocate 2 gigawatts of power towards mining Bitcoin and building AI data centers. So when this kind of globalist IMF comes into your country and tells you how to start running your business, Bitcoin becomes a very tempting negotiation tool in order to restore some sovereignty over your own domestic printing press. Because as long as you have energy, you can mine Bitcoin, sell it for dollars every day. You don't need the IMF for that. And at the same time, you can always hold out the threat of like, hey, IMF, if you don't roll over this loan, we're going to go full legal tender like El Salvador. And they hate that. So it's very handy as a negotiating tool. And last year was Ethiopia, Kenya, Argentina, all with IMF deals, all started mining Bitcoin at the government level. And now we've got Pakistan joining the fray. So that's really my thesis at the sovereign level, is that it's an emerging market or frontier market, countries with high inflation rates, less trustworthy institutions, or IMF packages will be most attracted to accelerating their Bitcoin mining. And now with this ESG trend kind of in the rear view mirror, I think countries and companies are more willing to use what had been politically disfavored sources of energy, and that'll be positive for Bitcoin as well.
Bitcoin now the number one way that emerging and frontier nations are fighting back against IMF globalist tendencies. Matthew Sigel, head of digital assets research at VanEck. Thank you so much for joining us today and offering your insights. Please tell people where they can find you online.
Sure. On X, I am Matthew_Sigel, or you can go to vaneck.com and click on the digital assets tab, and you can sign up to receive emails of all of our research.
Excellent. Thank you so much for joining us once again, and we'll catch you guys next time.
Thank you.